Hey everyone, and welcome back to another portfolio update. So, not gonna sugarcoat it, last week a horrible week for the portfolio, down 6.36%, whereas the S&P 500 was down just close to 1%. Year to date, if you look at the difference here, the couch investing portfolio is down 1.7%, whereas the S&P 500 is up 1.38% since the start of the portfolio, which was basically a year ago or so. Still up 56.94%, whereas the S&P 500 is up 19.61% in that same period. So what are we doing right now, right? Because a lot of people are saying, oh, this is the start of a big crash, you should start selling, stop buying, etc., etc. So what's going on? What are the, let's say, market guys telling us? Well, on the one side, we have folks saying, oh, this is the top has been reached, the bull market is running out of steam. On the flip side, you have the forever bulls, the Tom Lees, for example, who are saying, look, we are in a buy the dip type of environment. We are still good for the bull market to continue. So where are you right now? Have you been buying the dips? Have you been increasing your cash position? What have you been doing? Let me know down in the comment section below. Now, you know what I've been doing. I've been buying a couple of shares here and there. I also closed a complete position in this portfolio, and I've actually injected some cash as well, the first time in months actually. So let's discuss all of that, but let me first touch on a couple of macro things. For those that have seen the 4 stocks to buy in the month of March video, you've probably seen this already. So right now, we are in extreme fear on the fear and greed index, although I do think that the majority of the time this thing is pure BS. Then with regards to trueflation, we're at 1.51, which is, well, quite low, to be honest. Switching to rent, if you look at the monthly change in national rent, month of January, we're of course going to get the month of February pretty soon. The month of January, we look at US rent that fell 0.2% in January 2025. Now, of course, we are now entering a period where same time last year, we saw some increases. So let's see what those numbers will tell us in the coming months. Of course, I believe next Friday we have some job reports. So of course, all of these things will affect the market in the short term. Right now, if you look at the 10-year yield, it actually came down to 4.2% at the moment. And of course, this coming down should be a good thing for the market, should be a good thing with regards to, well, what the bond market thinks about inflation. I mean, look at where we were at the start of the year, pretty close to 5%. And since then, this thing has come down quite rapidly to now 4.2%. So yeah, despite all the noise and a lot of, let's say, bearish noise out there, there are still some quite bullish indications. Yes, of course, tariffs, inflation, Doge, etc., lots of noise might impact the economy negatively. GDP growth, of course, with the tariffs, we've seen that. Actually, I can show you this right here. First of all, meme of the week. I want this to be a weekly thing. You can tag me in the best memes on X, send me a DM or something like that if you're on X, and if not, then not. But I'm proud to say that this is the first meme of the week made by myself. So Intel, Nvidia, AMD, come on guys, let me play with you. I thought this was a pretty funny one from my part. Then looking at the US trade balance and imported goods, as you can see, we see here with US trade balance a huge dip. Why is that? Well, if you look at imported goods, that has spiked. So massive imports before tariffs will make, well, the GDP number look quite bad, but this is just, in my opinion, going to be a short-term thing that probably will create a lot of headlines. And as I've said in the previous video, probability is a measure of the belief that a particular event will occur, not a measure of the frequency of that event in the long run. This has to be something that the Fed reads on a daily basis. And so right now, with uncertainties, we know that the stock market does not like uncertainties. This is not something new. But if we zoom out a little bit, if we zoom out just a tiny bit, what do we see? Well, exhibit number 1, right? When we reached the peak of the euphoria back in 2021, the S&P 500 basically dropped more than 25%, okay? But let's say you bought the top here in 2021. Yeah, you bought the top in 2021, you would still be up 25% today. Not too bad, right? In the meantime, on our way up, we've had one 10% drop, 5% drop, another 9% drop, another 7% drop. Well, no, this has to be 7% if we go all the way to the 200-day moving average. Currently, we have dropped around 5% or so. So we've seen plenty of 5% drops, couple of 10% drops in the meantime. But guess what happened if you zoom out? Well, we just went up and up and up. So you go up, you go down a little bit, you go back up, you go down a little bit, you go up again, down, up, down, up, down. So basically the stairs on the way up. Now, of course, in the short term, we can go down a bit more. For sure, I don't know. You don't know either. If you knew, you'd be a billionaire right now because you'd had that crystal ball that gives you the correct answers. We don't know. What we can control is what type of companies we want to have in our portfolio, whether or not we want to add more to those positions at the moment or increase our cash position. That's exactly what I've been doing in the meantime, because me, although I know some of the names in the portfolio are not popular, some of them think that these are shitcoins, meme companies, etc., that's fine. That's why I own them and not you, right? That's the clear difference here. But when I look at each and every company that I own, even the smaller ones, I can see growth. I've seen growth in this earnings season. I've seen growth in the reported quarter. I'm seeing growth in the guidance as well. So I'm pretty comfortable owning those. And right now, as you can see, most of the positions are still in a pretty good position, right? SoFi is still up close to 80%, PayPal 18%, Alphabet actually took a hit, so that's now only up 7.23%, Alibaba performing very, very well for me at the moment, up 53.3%, Intel is back down to 4.5%, Uber up 18.69%, Micron up 2.4%, we have here Tesla still up 62.84%. I am now quite happy that I did take some profits above $400. I did increase my cash position, that's now back to 6%. We have Rocket Lab here, so yes, that has come down a little bit because of, well, it was at $30, it's now at $20, but I'm still up 253% on that. Meta up 52%. The local, after the 30% crash on Friday, I'm only down 6%. Of course, I was up, I think, over 20-30% or so. So yeah, that haircut on Friday did definitely hurt. You're going to ask me, so did you buy on Friday? No, like I said in the live stream, I'm going to wait a couple of days to see how the market will react. When I see those huge hits in one day, I usually like to see where the market is going in the next 2 days or so. A 2-day rule with these types of cases. I'm still very bullish on the company because if you look at guidance, growth-wise, still pretty good. AMD still bending out that position, but I'm already down 8.6%. Some people will already tell me, oh, you see, you should not have caught a falling knife. I'm sorry to say, but this is not a falling knife to me. Then we have Walt Disney Company up 5%, and then the smaller ones, Upsellera, Celsius, and Owlet. And as you can see, there is one position that does not appear in the portfolio anymore, and that's Transmedics. I did sell Transmedics at $75 for just a 4.26% gain, purely to increase the cash position. And then, as you can see, I have been buying more AMD shares just above $100. I've been buying more Alphabet shares at $168, more Micron at $91. That's an increase of 10.4%. Then more AMD as well, an increase of 16.13% at $100. Deposited $5,000 in cash for the first time since October. And then I also added 12% to my Rocket Lab position at $18.03. So yeah, I've been buying, especially when I've seen a lot of red. And as you can see, I am buying more and more AMD. 5 shares here, 5 shares there, then 10 shares when it was at $100. Of course, we're now at $99.91. So should have bought under $100. Okay, if it stays under $100, I'll probably increase my position in AMD. Right now, I have 72 shares. I want to get as close as possible to 100 shares for that position. So slowly but surely, I'm building out that position. I now have 6% in cash, so I am quite comfortable with the way this portfolio is looking, despite the short-term noise, entering a let's say down cycle or something like that. Like I said, I've seen all of these companies report already. SoFi is doing fine. PayPal is doing fine. Alphabet doing well. Alibaba doing well. Intel is the question mark here. What's going to happen with that? Uber is doing fine. Micron, in my opinion, will be fine in the next couple of quarters. Tesla, I rather not comment on it because I know a lot of bots will be in my comment section. Rocket Lab doing fine. Meta, of course, as well. D-Local, in my opinion, still doing fine. Just the market just doesn't care much about a huge increase in TPV and all of that for the year. So, okay. AMD will outperform the market for many years to come. In the meantime, I'll accumulate more shares. So thank you very much for all the cheap shares. Walt Disney, my boring business here in this portfolio. I think I'll be fine with that. And then we have the bets and the bag holder of Celsius. Now, to be honest, now I'm quite happy that I sold 55% of my position on Friday, and maybe I should have sold all of it. But oh well, maybe some tax loss harvesting later down the line. And so to come back to the first part of the video, perma bulls, perma bears. Of course, perma bulls make way more money than perma bears, right? People that are always bearish barely make any money. People that are always bullish, of course, do take a hit once in a while, but over the long run, they do make quite a lot of money because all in all, the market does go up and good companies do go up as well. So me right now, despite all the noise, I enjoy these dips. And I think that a lot of companies, despite the market being near all-time highs, because don't forget, like even after that hit in the last couple of days, especially for big tech companies in general, overall the market is not that far away from its all-time highs. So let's calm down. It's not like we're down 20, 30% or so. No, some companies, yes, but some companies went up 300, 400% in the last couple of months. So yeah, some companies just had sky high valuation a couple of weeks ago, never made any sense. So we're getting back to reality. Me personally, I think I own companies that do not trade at super high valuation. Far from it. You might say, oh, but you own Tesla, you own this. Okay, true, Tesla is not the cheapest stock out there. But a couple of quarters down the line, some increases in free cash flow, some increases in earnings because of Megapack Factory, Model Y sales ramping up, I think we're going to have a different conversation. And to be honest, if Tesla stock goes to 250, I don't know if it will, I don't know if we're going back up, but if it goes to 250, then I'll probably start adding more to that position. All in all, I am a buyer in this market. I'm a buyer of my companies in this portfolio. Of course, there are other companies on the watch list, right? I've made a list. Nvidia under 100, I'd probably have to open a position. New Holdings is another fintech company that I would not mind adding to this portfolio, but at the moment, I just rather increase the positions that I have right now because as you've seen, AMD, very bullish on this right now, but it's still a small part of that portfolio. So as long as we stay at those types of prices, which to me, I already see as big value, I'm fine. I liked AMD at $110. I love it at $100. If it goes lower, I love it ×2. So yeah, to me, I don't see here any falling knives type of thing. But that's just me, of course, that's just me. So all in all, that's about it. I know a lot of people are panicking, but to be honest, know what you own and you'll never panic. I think that's the message here. So that's about it. Do let me know what you've been buying, selling in the last couple of days. Make sure to hit the like and subscribe button. We really appreciate that. And I'll see you all in the next one. Bye-bye.